Asian markets advanced across the board on Monday as investor sentiment improved after high-level trade talks between the United States and China. Donald Trump announced that both sides reached a very substantial Phase 1 deal that will address intellectual property and financial services concerns and include purchases of about $40 billion to $50 billion worth of agricultural products by China. China also agreed to address intellectual property concerns raised by the U.S. As a result, Washington said that tariffs on $250 billion worth of Chinese imports that were set to rise from 25% to 30% on October 15th will not go into effect. Against this backdrop, the Shanghai Composite added 1.15% to 3,007.88. Hong Kong's Hang Seng Index rose 0.84%. The South Korean Kospi Index gained 1.11%, while the Australian benchmark ASX 200 rose 0.54% to 6,642.60. On the data front, China's import and export numbers for September were lower than expected. Chinese exports fell 3.2% on year last month, while imports declined 8.5% for the same period. The total trade balance in September came in at $39.65 billion. Meanwhile, in Europe, regional investors were not impressed by yet another round of US-China trade talks as market participants continue to monitor developing surroundings Brexit. The Pan-European Stock 600 closed around 0.5% with almost all sectors and major bourses trading in negative territory. China said it wants to conduct another round of talks before signing Phase 1 of the proposed deal and also added that it prefers the U.S. to scrap a tariff hike planned for December, which added to the uncertainty in the markets. U.S. stocks closed slightly lower on Monday as new worries around a U.S.-China trade agreement emerged. On Friday, the three leading indices gained around 1%, while at the start of the week, the Dow Jones Industrial Average was down 0.1% to close at 26,787.36. The S&P 500 dipped 0.1% to 2,966.15, and the Nasdaq Composite also slipped 0.1% to 8,048.65. Interestingly, Chinese state data said that both sides made substantial progress but did not use the word deal when describing the outcome, which made investors cautious, especially after Beijing said it wants to have additional trade talks before signing a Phase 1 deal. Investors also braced for the start of the earnings season as Citigroup, Goldman Sachs, JP Morgan Chase, and Wells Fargo are set to release their results today. In currencies, the dollar turned marginally higher against the majors as risk sentiment has deteriorated. The Euro-US trading was muted, with the pair creating an inside day bar candlestick pattern on Monday. The euro managed to stay above the 1.10 handle amid a lack of news and developments, with the market reaction to the outcome of the US-China trade talks having been rather muted. Today, the volatility may rise due to a German ZEW survey. Weaker than expected figures would reinforce German recession fears and could lead to a break in the common currency below 1.10. Once below, the pair may target the 1.0970 region. And as for commodities, Brent crude failed to stay above the $60 handle and retreated below $59, with the intraday support coming in at $58.50. The market was down as trade doubts re-emerged after China asked for more talks with the U.S. before signing Phase 1 of the trade deal. In geopolitics, Saudi Arabia has denied any involvement on last week's apparent attack on an Iranian oil tanker near the Saudi Arabian city of Jeddah. Meanwhile, Trump vowed that sanctions on Turkey are forthcoming following his recent withdrawal of U.S. troops from northern Syria. That is all for today. Thank you so much for watching, and please click subscribe to always be in touch with the latest market news.